Are you a first-time home buyer? Well, then you should definitely check out this video. Today, I'm going to take a deep dive into FHA loans and let you know all the information we can about the most popular loan products for first-time home buyers. FHA stands for Federal Housing Administration. It's a loan product backed by the government designed to make homeownership more accessible. So it's a really great program for first-time home buyers that don't have the best credit score, and home buyers that are looking for a small down payment to get into their home. This fits all those boxes, and it's the most popular loan program for first-time home buyers. So one of the things you hear all the time with FHA loans is mortgage insurance, also known as MIP, PMI. There's lots of different phrases for it, but in essence, FHA loans carry two types of mortgage insurance. There's the upfront mortgage insurance premium, or UFMIP, UFMIP, and that is a percentage of the loan amount that gets built into your loan. So this is an upfront mortgage insurance premium that's financed. You don't have to bring it to closing. It gets rolled into your loan amount. The other mortgage insurance premium is the monthly mortgage insurance premium. That is a mortgage insurance program or plan that is designed to protect lenders against if the borrower defaults or stops paying their mortgage. And that is paid monthly. So you'll have an upfront mortgage insurance premium built into your loan amount and a monthly reoccurring mortgage insurance premium. That's part of your monthly payment. The upfront mortgage insurance premium, or UFMIP, UFMIP, is 1.75% of the base loan amount that gets rolled into your loan. So this is the upfront premium of that lender coverage that we're talking about, and that gets built into your loan amount. It's a closing cost that you do not have to bring to closing because you're financing it. So if you're borrowing $300,000, the upfront mortgage insurance premium would be about $5,250 added to your loan amount. The other mortgage insurance is paid monthly, and that's a much smaller amount. It's usually like 0.055% of the loan amount, and that is a monthly reoccurring payment that you pay as part of your mortgage. Now, the big thing when you're weighing FHA versus, for example, a conventional loan is the mortgage insurance premium. FHA loans are going to come with that upfront mortgage insurance premium, but any loan, any mortgage product aside from VA that you're putting less than 20% down, you're generally going to have some form of mortgage insurance. On a conventional loan, depending on your credit score, it might be cheaper, but on an FHA loan, it's not credit score dependent. It's just based on the percentage of the loan amount. So with FHA, if you're putting the 3.5% down, which is the minimum down payment required, that mortgage insurance, monthly mortgage insurance payment is for the life of the loan. If you put 10% down or more, the mortgage insurance is only for the first 11 years. So that's a big difference. Some people have to go FHA even though they're putting more money down, whether it's credit score or, debt to income ratio, they still fit in that FHA box and not that conventional. So if you put more than 10% down on an FHA loan, you're going to pay that mortgage insurance for the first 10 years. You put less than 10% down, the mortgage insurance is going to be paid for the life of the loan. The only way you would stop paying that is if you refinanced into, say, a conventional loan. Another thing about FHA loans is they're a little stricter on property condition. So FHA has certain rules. They're more forgiving on the borrower. They're less forgiving on the property. So you can't buy a real fixer-upper. It doesn't have to be perfect, but it can't have things like cracked windows, peeling paint, leaks are an issue, plumbing issues, stuff like that. The FHA appraiser is going to go out there, and because he's doing an FHA appraisal, he's going to look for some, housing conditions that would probably sneak by on a conventional loan, but on an FHA, they could be an issue. I'll give you an example. I just closed an FHA loan last week, and when they did the appraisal, they noticed they had some cracked tiles. So it doesn't have to be a beautiful fix. They went out there and installed a new tile. I don't even think it matched, but it's no longer like a tripping hazard or a safety issue, so that was able to pass. So a quick breakdown of the pros and cons. FHA loans are low down payment. They are more forgiving on credit scores. The minimum credit score is a 580. So, if you don't have the perfect credit score, you'll probably still qualify for an FHA loan. They're more forgiving on debt to income ratio as well. A borrower that with a certain amount of debt, car payments, credit cards, whatever, that wouldn't qualify for a conventional loan very well could qualify for an FHA loan. FHA loans are great for first-time home buyers for that reason. If you haven't had a ton of credit experience, you haven't built your credit up to its peak yet, or you have a little bit more debt than a conventional loan will offer, FHA loan's a great great low down payment way to get into a home. And the goal is, if you keep the home a long time, you'll eventually build equity in the home. And then depending on what rates do and, that you qualify, you can always refinance into a conventional loan and drop that PMI payment off your monthly payment. Some of the cons on the con list for the FHA loans are the mortgage insurance. There's a good chunk of mortgage insurance that gets built into your loan amount, and you are paying that monthly. And also the slightly stricter appraisal standards. Conventionally, you get away with a little bit more on property condition than you can on FHA. And one of the great things is it's the same application. So if you're on the fence about whether you want to look for an FHA loan or a conventional loan, you just fill out the same application. So I hope that helps answer your questions on what an FHA loan is and who it's designed for. You do not have to be a first-time home buyer to qualify for an FHA loan, but it is the most popular program for first-time home buyers for a good reason. So, and the other great thing is you don't have to determine whether it's you qualify for it or a conventional. That's one of the things we provide at Fairview Lending is a free upfront mortgage consultation, a free pre-approval. I'm going to look at your application, review all the documents, look at your credit report, and let you know, hey, you're better off in an FHA loan for this reason, or actually we can go conventional, might be better off for you for whatever reason it is. So we are happy to help. We have no upfront fees, and it's a free, no cost, no obligation mortgage consultation. Reach out. Our number's listed here below. Fairview Lending, we've been in business over 20 years in Cape Coral, Florida. We are Florida experts, and we have an office located on Del Prado and Cape Coral to meet you in person, by phone, email, whatever you prefer. Thank you very much for watching.